Hi guys, welcome back to my channel. In this video I'm going to share with you the reason why you are losing out applying that simple price action strategies you are taking online or on YouTube. I'm going to share with you the reason why you are losing out and how to apply those price action strategies you are watching anywhere on YouTube or any course you have taken, and I will show you the exact way to apply that and start making money using just some stuffs or some videos you watched on YouTube. Now, in order to do this, we are going to be learning how to identify trends. That's the first thing we are going to be looking at. Then after that, we are going to learn how to draw a perfect trend line. Then we will be adding thirdly the indicators that will help us confirm the trend. Okay, then we will now look out for something like M pattern. I'm going to use it as a key in this particular video, okay, because most of us have heard about M pattern, W pattern, that is the double top, double bottom pattern. Okay, we are going to be looking for it. Okay, then after that, we are going to identify some confluences using that same strategy. Okay, then we are going to switch to the perfect time frame. I'm going to reveal to you the best time frame for this M pattern or W pattern. Then when we have switched to our time frame, which will be our entry time frame, we are going to be looking for candlestick confirmation for our entry. So once we identify the entry point, we are going to enter, and I'll also share with you the possible strategic stop loss level and take profit level. And this is what we are going to be covering in this video. If you are new to my channel, please consider subscribing to this channel. Don't forget to turn on the notification bell to get notified each time I release a new video. Also, leave a comment on the kind of video you want me to create next on price action. Okay, let's dive into it. So the first thing I say that we are going to be checking is that we are going to be identifying the trend. We need to know the trend, okay, because this strategy is strictly for a trending market. All right, so first of all, you can see this is a daily time frame, so I'm going to switch to 4 hours time frame. Okay, so we are switching to 4 hours time frame in order to identify the trend, the current trend of this price. Okay, this is volatility 75. Okay, now you can see that this price is clearly trending up. Okay, you can see the price making the higher highs, higher lows, higher lows, or swing highs, swing lows. Okay, now after you have seen that this price is trending up, okay, you can see that the price is clearly going up. The direction of the price is upward. Okay, now when you have identified the trend, for you to confirm this, you have to draw a perfect trend line. Okay, for you to do that, you have to pick at least 2 or more swing lows. Okay, 2 or more swing lows. You can see we have our swing low here. Okay, we have this one here. Okay, and we have this, we have this, we have this, this and that. So we have about 4 swing lows or more than that in this chart that we are looking at. So I'm going to pick my trend line, then place a straight diagonal line. Okay, this way. You can see I'm not forcing the line. I just have to leave the line freely or draw the line freely. Then once you are done drawing this line, okay, we are able to do draw our trend line. So the next thing we are going to do is that we are going to be switching to our 1 hour time frame, guys. Okay, so now on 1 hour time frame, you can see how perfect this trend line right there reacts with the price. So the next thing we are going to be doing is that we have to add an indicator to confirm this trend line. Okay, an indicator that will help you even when you are getting the trend line wrong. The indicator is going to help you adjust the trend line or show you the perfect place the trend line should be, and that is exactly what I'm going to share with you. That's why I say that this strategy is the most, in fact, the one of the best things you are going to see on YouTube. Okay, now if you miss or you are finding it difficult to draw the trend line, this indicator is going to help you do that. So I'm going to pick this simple indicator which we all might be using. Okay, now I'm going to pick moving average. Okay, I'm going to pick moving average right here. So when I pick it, I'm going to change the settings by clicking on these settings or format. Okay, now I'm going to the input and I'll put 50. Okay, so I'll put 50 and you can see it's closed, and that's all. Okay, so I might just decide to change maybe the color to something okay, I think blue is nice. Okay, I will leave it as blue. I can just increase it a bit for clarity, and I'll click on done. So as you can see our indicator, how it's aligned with our trend line. Okay, this indicator is just serving as support right here. Okay, it's also serving as a trend line. So you can see, even though if you are mistaken, if your trend line is not correct, the indicator is also going to help you identify the perfect trend. You can see that this price is trending up, and the indicator is also showing us the way. Okay, now we have identified this trend, which helps us to identify the trend or to confirm the trend. So the next thing we are going to do is to look out for W pattern. Okay, for an uptrend, pay attention. Remember, I said that we are going to be using the double top, double bottom, or W or an M pattern, depending on whatever you call it. Now, on a downtrend, okay, on a downtrend we are looking for only W pattern. Please pay attention. On a downtrend you are looking for W pattern. On in an uptrend like this, okay, in an uptrend you are looking for W pattern only, which is double bottom. All right, so I'm going to start with this, which is an uptrend. Okay, for this you can see we are looking for only W pattern. So at this point right here, you know, the price tested here, come back and retest this point again. Okay, giving us that W shape. You can take that trade. Okay, you can take that trade right here. The reason why you are going to take the trade right there is because the price is testing our trend line the second time, and you see that we still have our trend line, which is our 50 moving average, at that same point, which is serving as confluence. You can see we have the the W pattern right there. Okay, we have our trend line right there, and we also have our indicator at that point. Okay, so it is a very strong buying signal right there that you are seeing. So if you meet a trade like this, okay, it is a great opportunity to enter or to go long. Okay, on this kind of trade, it's a great opportunity to go long on this kind of trade. You can see here we have our trend line. The price is at the trend line. Also the price is making a W pattern, okay, which is a buying signal, and also we have our indicator aligned at that point. So you can see that position is a good entry, is a good trade for us. Okay, is a good trade for us to take, right? So now if we scroll up a bit, pay attention to this. This is very simple. If you scroll up, you have the double top pattern, which is the M pattern. Okay, we have it right here. Okay, so the question is, this is where you are getting it wrong. This is where you are getting it wrong. So at this stage, you can see we have a clear M pattern right there. So some people are going to jump in to take this trade, to go go short on this trade. Okay, so if you go short on this trade, look at what will happen. If you go short, you might decide to enter this trade at this point. Okay, maybe anywhere from here. After confirming your entry, you might enter here. Then your stop loss should be somewhere, maybe here. Okay, maybe somewhere here. Then your take profit should be either ×2 or ×3, 1:2 or 1:3 risk reward. Okay, so if I should use 1:3, you can see our take profit, the price did not even come close to our take profit level. You can see our take profit level. Okay, if I use 1:2, let me go up to 1:2. So this is actually 1:2 risk reward. Sorry, so this is actually 1:2 risk reward, and our price was not able to hit that. Okay, so let me just push it to 1:1, which is you can't use 1:1. Okay, don't use it, don't even try it. It's not a good management, risk management right there. Okay, so I'm trying to see 1:1. Okay, the price was able to do 1:1, but this is not what you are looking for as a trader. You cannot be trading risking $100 to get $100. That is a very bad trade. You should risk low and target high. All right, so that's why I said this is not a good trade. Now if you enter this trade, if you go short on this trade, you are going to lose out, because our stop loss is going to be triggered. Yes, you have discovered M pattern right there. You are correct. Okay, you are good, but the problem is that you are trading M pattern. You are looking for M pattern on when the price is trending up. Okay, you see a clear uptrend and you are looking for M pattern. That is a very wrong decision. Okay, so it doesn't mean that the M pattern you are hearing everywhere on YouTube or double top doesn't work. It works, but the problem is that you are applying it as the wrong trend. Okay, so if you are currently like this trend, which is uptrend, okay, if you see an uptrend, you should be looking for only W pattern. Okay, once you see a signal like this, that is the M pattern, you avoid trading it. Okay, you avoid trading it. You see that this is a bad trade, guys. You can see that that is a very bad trade right there. So we're not supposed to take that trade. Okay, we're not supposed to take that trade. So this is a very bad trade. This is a very bad trade right there. So this one is good. So we have to take this because we are currently in an uptrend and we are seeing double bottom, okay, which is a good trade. So we are taking this one right here. It's a good trade. Why the other one is a bad trade, guys? So now we have our good trade here, bad trade. Okay, now the price already come here and make another W pattern right here. Okay, you can see this W pattern right here. So the price make another W pattern. Okay, we are likely going to take this trade. Okay, because the second leg of the W, which is at this point, is at our moving average, which is serving as our trend line, okay, or support right there. So you see our W pattern forming at the support level, which is our trend line, and also our indicator. You can see that confluence is another good trade to enter. So if you have taken this trade right here, it could have been a good one again. Okay, could have been a good one again. Now we have it again right here. The price, came back to this level, then bounced back, retested that level, forming another W at this zone. Okay, so at this zone we are taking another trade. Okay, because you can see we have our trend line, we have W pattern at that zone, and we also have our indicator aligned at the same point. Okay, we are still going to take that trade right there, and we are going to come out with profit, guys. We are still going to come out with profit because we are at the right, we are trading at the right place. Okay, we are entering our trade, or we are using the pattern or applying those things we are watching on YouTube the right way. So the problem we are having is not that all the strategies you are watching on YouTube is not profitable or good. Some of the problem is that you don't know how to apply them, the kind of trend to apply them. Is it a trending market? Is it a ranging market that you need to apply this kind of strategy for you to take advantage or maximize your profit using that same that particular strategy? So you can see, using this M and W pattern, you can still make money using that simple strategy. It's one of the best strategies you can use, but just understand how to apply them. Okay, you can see we have our trend line, we have our indicator, and we now identify the pattern. Okay, so you can see here again we have also the price retesting at that point. You can see the confluence, see the trend line, and you see our indicator line also at that point. Okay, this is also a good trade to take. This is also a good trade to take. Now if we pick that point again, okay, if we pick that point, because of the two signal we are getting there, because of the trend line and our support, okay, and the price coming back to test that same point, now we are going to be making money out of that trade also. Okay, so the question is, do we just jump in once we see the price retesting this trend line and our indicator, then forming a W pattern? Should we just jump in for a buy? Okay, should we just go long? Now sometimes you have to go to your entry time frame. This is 1 hour time frame. If you are using 1 hour time frame, you know that you are going to be doing this analysis on 4 hours time frame. Okay, but why I'm doing this analysis on 1 hour time frame, I've checked the trend using 4 hours time frame, come down to 1 hour time frame to see how they react and picture my pattern. Okay, then the next thing I'm going to do is to go down to 15 minutes time frame to see the perfect place, okay, the entry point. Okay, I want to identify the entry point using some candlestick reaction or patterns at that same point. Okay, so I want to see the candle, the price reacting to that level. I want to see a confirmation that this price is going to respect that level, is not going to break out of that level. Okay, so for the fact that you have identified the trend, that is number one. So after that, you add your indicator to confirm the trend, then switch to a lower time frame like 1 hour to see, picture those patterns, the double top, double bottom. Remember, for uptrend we are looking for only double bottom like this or W pattern. So when you picture those points, then go down to your entry time frame to see some reaction as the price comes so when the price come close to the our line, you have to see the price respecting or reacting to the line by seeing some candlestick pattern or formation at that zone. Okay, so you can see we have marked out all these zones, and this one is a bad trade. You have good another one, another. So if you pick this way, you are going to be making money. Now if I switch to a lower time frame, which is my entry time frame, 15 minutes time frame, I want to see some pattern. I want to confirm my entry point and also know my stop loss level. Okay, now you can see, let me go back a bit to I think the beginning of this. Okay, so this is the first one we are going to be taking, the first trade we are going to be taking. Now at this zone, okay, we look for a candlestick pattern at that zone. If there is any candlestick pattern at that zone, then we are going to be taking the trade. Okay, if you see any candlestick pattern at that zone, we are going to be taking the trade. Now here, if you look closely, we have a W pattern inside that zone. Okay, inside that zone we still have a pattern, which is W pattern right there inside this zone. So we could have entered our trade using that pattern at that zone, that formation at that zone. So that's number one. Then the second place we could have entered, if you look closely in the chart, you are going to see that we have a bullish engulfing candlestick on that zone. Okay, I think I have to adjust this so that you can see this clearly. So if you look here, you have the bullish engulfing candlestick right here, which is a signal. So once this bullish engulfing candlestick closes, you have to enter. You can see the first one, the second one. This green candlestick, you can see it completely engulfs the previous one. So this is the confirmation, our entry zone. So now if you look at this zone, okay, this is a bullish engulfing, which is a bullish signal. Now at the close of this candlestick is where you should enter. So our entry point at this zone, at the, for this trade, we are going long after the close of this candlestick right here. Okay, when this engulfing candlestick closes, we go long, set our stop loss below the swing low, then maybe take profit twice. Okay, twice our stop loss. Okay, and you can see which 1:2. So we raise it to 1:2. Okay, so 1:2. 1:2 is too small, so you can still make it, increase your risk reward to 1:3 or 1:4. You are still going to hit your TP level. Okay, you are still going to hit your TP level. So this is so easy and simple, guys. This is so easy and simple. You switch to your entry time frame at that zone, at this zone. Okay, the zone where we mark out, we use this rectangle to mark out. You look for candlestick formation, okay, any candlestick pattern right there. So we entered this particular trade using the bullish engulfing candlestick that we saw there, okay, where the green candlestick completely covers the previous one, which engulfs the previous one, and that is exactly the reason why we are going to go long on this trade. Okay, now if you go up, okay, this zone, this is a bad trade, so we are not taking it. This M pattern right there, so it is an uptrend and we are not looking for M pattern, we are rather looking for W pattern. So now is the retest. Look at the retest right here, when the price after testing here retested this point. Okay, so we are looking for W pattern, and this is a perfect W pattern right here. So when you see this, okay, when you observe this, you look for a candlestick pattern also, and we still have the same bullish engulfing at this point. So looking at volatility 75, you can see that bullish engulfing works perfectly on volatility 75. Now at that zone, you can see the bullish engulfing right there, where the green candlestick right here, engulfs this previous one. Okay, you can see, and you can also picture some quick rejections. The price starts consolidating at this zone. This is the first reaction of the price, okay, to that zone. Okay, this is the first signal you are getting. Okay, the price keep reacting to the line or the zone, seeing some quick rejections. Then after that, the confirmation, your entry confirmation, is when you discover this bullish engulfing. So at the close of that engulfing candlestick, we go long again on this trade. So at the close of this candlestick right here, which is the engulfing, we go on go long again on this trade. Okay, we go long and we still pick it to 1:2 or 1:3, anyone. Okay, you're still going to pick it to 1:2 or 1:3. So this is 1:48. Sorry, we have to go. So this is 1:2. Let's go 1:3 here. Okay, you just have to know your risk appetite, what you can risk and what you are going to be targeting. So for this strategy, the least you can use is 1:2, guys. Go for 1:3 or 1:4 even. So but the least is 1:2. Don't do anything less than 1:2. Okay, now you can see this one. We go back, you can see after this first one there's a retest again, and we are still having this momentum candlestick, the bullish engulfing. You can still see this candlestick again. So you can see now that this engulfing works well on this volatility 75 and also using the W pattern. Okay, so we still have the same pattern right here. When you see this price react after testing here, bounce back, and you see this reaction, you see the momentum candlestick right there, it engulfs the previous one. Then you take another trade at the close of that candlestick, which is at this point. Okay, look at where it closes here. So we enter long right there again, then set it at our, you can see the stop loss level. Okay, the stop loss level is below the first leg of the W pattern. Okay, you can see here, this is where you'll be setting, targeting your stop loss. Okay, so the second leg below it. Okay, now we are going to take it 1:3 or 1:2, anyone. This is 1:2 right here. Okay, so we are going to be taking it 1:2 or 1:3, depending. If it is 1:3, you are still going to be in profit. You are going to take profit in this trade. You can see this is 1:3 also. So this is how this strategy works. Okay, this is how this strategy. The problem is not that the strategy you are seeing online is not correct or it doesn't work. It works. It all depends on your knowledge and how you apply it, how you combine different factors to take a particular trade. That's what matters. Okay, you combine different factors to take a particular trade. Now you also have here, okay, we also have it here, and you can see we have our candlestick pattern also reacting. You can see the candlestick reacting at that zone, having an indecision candlestick. You can also see you can call this candlestick also morning star, where you have the father. Okay, I call it the father, the mother, and the child in the middle. Okay, the little candlestick right there. So it's a bullish signal, guys. So when you see this, or you can just take the doji right there. Okay, then it's already a signal. After the closing of that, we are going to go long after the closing of this candlestick right there. Then adjust our stop loss and push our TP to 2 or 3. So this is 1:3 right here. Okay, so basically this is how we enjoy this. This is how we enjoy this. This is how you enjoy this thing. You just go to a higher time frame like 4 hours to see the trend, then draw your trend line, switch to 1 hour time frame to see or picture those patterns, add your indicator to confirm the trend. When you see these patterns, you mark out where you have confluence, where you have the indicator meet with the trend line and also the same W pattern forming at that zone. Then you mark out that point, dive into your entry time frame like 15 minutes time frame or 5 minutes time frame or any time frame that you use. Then look for candlestick reaction, the price reaction to that zone or patterns. Then you enter your trade and you see yourself making money, guys. So this is it, guys. I'm going to share with you an example. I think downtrend example. This is crash 500 right here, guys. This is crash 500. Okay, so if you look at this crash right here, crash 500 is this trend is down. If I go to 4 hours time frame to check, I have my lines and also the indicator also there. So if you go to 4 hours, you can see this is a downtrend, guys. This is a downtrend, okay, right there. Okay, we have our downtrend right here. That's the trend. So now if you look at this, you can now switch to maybe for 1 hour time frame, okay, to maybe see the confirmation, adjust your trend line, anything, you know, depending on however you enter your trade. But what we are looking for now is M pattern instead of what? W pattern. Now you can see this W pattern right here. We are not taking this trade, okay, because this is a downtrend. We're only looking for M pattern here on a downtrend. So this is W pattern. We are not taking this trade, okay. We are not taking this one either, because we are not looking for W pattern. We are looking for M pattern, okay. So this trade is no go area for us. All right. So this trade is no for us. This one also no. Okay. So where is the trade? Where is the trade opportunity for us here? So we have the first one right here, okay. You can see our W pattern, sorry, M pattern right there, okay. You can see our M pattern at that zone. This is crash 500, guys, okay. So this works both on crash, volatility, step index, currency pairs. I'm sharing with you something you cannot get anywhere free of charge, okay. I'm giving you guys free, okay, in this channel. I want you guys to enjoy this. Now this works anywhere, okay. This works anywhere as long as financial market is concerned, whether it's even you know, crypto. It works on crypto, stock, anything at all once trading is involved. Now you can see this is M pattern right there. We are taking this trade, okay. The reason why we are taking the trade is that the M pattern is forming when the price is trending down, okay. That's the first thing. The price is down, so we are looking for M pattern. Now we have our trend line at that zone, okay, and we also have our indicator also at that same zone. So we have our confluence there, then we mark out that zone for a good trade, okay. Now we have another one right here, okay. We are going to still be taking that trade because we have our M pattern at that zone, okay. We have our M pattern here, so we are still going to take this trade. It's a good trade for us to take when the price retested, and you can see the line also are there, okay. The lines are there. So now if we go here, you can see this one is also a good trade, though, okay, though we only have our trend line closed. I said the trend line is just confirming the trend. It's just trying to help us get, that is the indicator is just helping us to get the correct trend line. So even though if our line is not touching all the price, the indicator is going to help us to, you know, identify these swing highs, okay, in a downtrend like this. So now you can see our good trade, the bad trade, the ones we are going to be avoiding. So I don't have to waste time on this, guys. I don't have to waste time on this. So you just have to take this kind of strategy serious. What you need to do, that we have seen this now on 1 hour time frame, you have to switch to a lower time frame like your entry time frame to see some reaction, your entry confirmation, so that you'll be able to know where to enter your trade, your take profit level, and your stop loss level, guys. So you have to take this strategy serious, guys. You have to take it serious. You know, we are not taking this trade because we are not looking for W pattern, okay. We are looking for M pattern. We are not taking this one also, okay. So we are going to be taking this. You can see this momentum candlestick is a reaction. You can see when the price bounce back here to our line, you see this crash, okay, the drop, move down to this point, and you enter your trade immediately at that zone, okay. After you see that drop, it actually confirms that the price reacted to that zone, okay. Then at the close, you enter your sell, you know, shift your stop loss above the previous swing high, then take your take profit 1:2 or 1:3. This is 1:2, okay. This is 1:2, then 1:3. Can push it down to 1:3, which is here. Okay, so depending on your risk appetite and your target. So this is it for this one. Here also we still have the same thing. When the price move to that line, okay, that zone, you can see the reaction. There was drops. Okay, you have this one here and a pullback again. There's another one. Then you have to enter. Then you can actually wait. If you don't want to enter aggressively on this trade, there are two ways you can enter this trade, guys. I have to share this also with you guys. Now the two ways you can enter is either you enter your trade when you see any reaction on the zone using candlestick pattern. Maybe you enter after this first drop, okay, or this second drop. You can enter anywhere here. That's the aggressive entry right there, okay. But if you want to be more conservative and more accurate, okay, you just have to wait for the price to break this our trend line, our moving average, okay. Have to wait for price to break our moving average before you enter, which is the second entry for this strategy should be here, okay. When the price breaks our moving average, then you enter your trade. As simple as that, okay. So if you look at this point again, see the first entry, okay, but we still have second entry, okay. If you want to be conservative, you wait for a breakout, which is here, okay. The price breaks our moving average right there at this zone. Look at the spike that breaks it. So you could have entered somewhere here and you push this price down. So this is it, guys. This is on crash 500. I've shown you the example on volatility 75, guys. You can keep trading this, okay. One more thing, okay. This is a kind of bonus for people who have been watching this video to this moment. Remember to subscribe to this channel if you have not. I'll be dropping more a kind of more advanced concept like this, both on boom and crash, on currency pairs and other indices, okay. Now quick one, leave a comment, okay. Tell me the kind of what you want me to create, any other video you want me to create, or something you want me to create video on once price action is concerned. Then bonus tip for you guys, okay. Now the problem we are having is that you know, when we watch this kind of strategy, you know that this is good strategy, you know that this thing works well, okay. But we have this problem of patience, okay. We don't have that patience to wait for these things to happen. Sometimes we might see something that look like, oh, it's like it's W pattern, it's like M pattern, and you just jump in. For the fact that you have this kind of strategy, okay, that is working well for you, you don't have to rush any trade. You just have to wait for the price to come to you, okay. So if I switch to a higher time frame like 1 hour, I want to share this with you because it is very important, okay. Even after learning this strategy, okay, knowing that this strategy works well, okay, even when you know that this strategy works well, sorry, I'm having a network issue. Now if you know that this strategy works well, you still have to be patient to wait for these things to come to you, wait for the price to come to you. So if you jump into the trade without waiting for the price to come to you, you are still going to be losing out. Now look at here, look at what is happening here. Some people might come here and say, wow, the price is up. You just want to jump into the trade, you know. You might be jumping and the price is reversing to the opposite direction. Yes, the price is trending up, but your entry is wrong. So you still have to be patient and wait for this price to bounce back, okay, to this level, okay. By then we have our line, our trend line, okay, and our indicator. That's point again. So when you see this, our price back to this point, then you pick that level, okay, switch to a lower time frame to see how price react to it. Once you see a good reaction, seeing the price reacting to that zone, okay, maybe seeing some candlestick patterns as that zone, then you go long, okay. You go long. You don't just have to jump into a moving train, guys. If you don't want to keep losing money trading the forex market, you don't jump into a moving train. You have to wait for the train to stop for you, okay. Just like the price want to stop for you to enter. If the price is not stop for you to enter, you avoid trading. Once you see the price comes to you, then you jump in. Don't jump into a moving train. This is a quick one for you, a tip for you if you want to, you know, keep making money consistently. Instead of sometimes, you know, some people will just make money using this strategy. The second one, they keep shouting, wow, this strategy is working well, it's working well. Within 2 or 3 or 4 days, they will start seeing some error or fault. It doesn't mean that strategy has failed. No, you have failed to start, you know, you have failed to apply the strategy the right way, because the winnings have entered, into you and trying to control your emotion. Now you think you are now God, you can take any trade anywhere, using anytime you see something that look like M or W pattern, you are jumping. No, you're not. You don't have to jump. You have to confirm that this is the M pattern, and you have to confirm that this is a W pattern. If it's a W pattern, is that an uptrend? If it's an uptrend, is that a zone where we should be paying attention? That's, do we have our trend line there, or do we have our moving average there? If we have it, then good, you enter your trade. So guys, this is it. Don't forget to subscribe, don't forget to like this video. Okay, please destroy that like button for me. Also share this video, leave a comment, and I will see you guys in the next one. Enjoy. Bye for now, guys.